Chakri, last Friday afternoon, if I would have taken you in a corner and whispered Chakri, FPI, FDI, RBI, dividend, and then guess the Nifty level, what we would have guessed? Without looking at the screen, tell me the number.
Yes, all the right words should have taken the market up, but it didn't. I guess partly because now some of the FDI announcements, etc., are all more long dated. What the market today needs is some immediate stimulus measures which can revive the earnings.
It's come, Chakri, to be fair. Scrapping policy is what we hear about. The fact that depreciation would be charged, will be allowed. Government would be buying new cars and new vehicles. Somehow markets are not noticing it, or markets do not want to react to it.
Yes, see, for example, if you take autos. Now, autos in this month, they're going to again report very soft numbers, fairly well known. And these numbers are going to be softer than, again, these expectations. Now, going into the festive season, there's this huge expectation that festive demand will revive. But the rate at which it's going, the run rate, looks like with the high levels of inventory, it's actually not going to do that well. So which means there are likely to be further earnings cuts for the auto sector.
But isn't all that bad news already in the price?
Well,
you always say markets look forward.
Indeed. The markets look forward. Now there is a question of between where is the trough valuation and where is the growth expectations. So many of these stocks are actually trading close to their trough valuations, which is 2008 lows. So against that perspective, then the only question that remains confusing is what is the right answer is the growth. Are you looking at, because FY20 you expected 20% growth, now it's been revised to mid-teens. I think it'll likely probably settle down maybe low, like 11-12%. So from that perspective, there is not much upside, but the valuations are close to 2008 lows.
Chakri, I want to talk about the pharma space now. Given the fact that for Sun Pharma in particular, major overhang now gone for the stock, what exactly is your outlook?
I think the earnings are reviving for Sun Pharma. So with this overhang out of the way, kind of removed, I think for the valuation will provide support for the stock. I think clearly the earnings are set to accelerate for Sun Pharma, and with 20-25% growth for 21, the stock looks good at current levels.
Would you buy RBL Bank?
RBL Bank, well, it's trading at slightly the same valuation that it did in IPO, that it IPO'd at. So from that perspective, at that time it didn't have the overhang of all the current cases or potential cases. So from that perspective, it is not necessarily, it's still a cheap enough stock from a valuation perspective.
And growth's been been brought down from 30 to 20.
That's absolutely.
What is the right price for RBL Bank? 2 times book, 3 times book, 3.5 times book?
Well, if you take S Bank as an example, it's now trading at 0.78 times book. So with growth coming down for RBL, of course, it doesn't have as much SME as an Yes Bank. So probably about that 0.81 times book for an RBL, which indicates is more or less there, pretty much. It's somewhere there, and RBL is slightly over 1.1, 1.2 times book.
Just if capital raising is delayed, the management says that we don't need capital. So I don't know where this Morgan Stanley view is coming from. They're growing and their growth is going to come down. On the projected growth of 30%, they said we don't need capital for 2 years. If growth's come down from 30 to 20, all the more reason why you should not be worried about capital raising. Look, the challenge is not the balance sheet of RBL Bank. The challenge is, or the fact of the reality here is, it's the sentiment. We are going through this phase of the market where markets are reacting first, traders are selling first, and they're analyzing the news later on. In a bull market, when there is excess greed, nobody analyzes the good news, they react to the good news. So wherever there is good news, markets are making an excuse. Wherever there is bad news, disproportionate amount of selling keeps to be coming in. I've learned this purely out of experience, which is that typically when the sentiment is against you, and when good companies, good businesses, they get beaten down unnecessarily, that will be a good time to invest into stocks. And you need to sit, if you're a genuine long-term investor, I don't know what will happen today, tomorrow, this month, next month. If you're a genuine long-term investor, trust me, time's come to start doing some cherry picking in mid and small cap stocks. Keep a 2-3 year time frame. Stocks go down 10-15%, even 25%, who knows. But some good businesses in aviation, consumer durable, private banks, they would definitely flourish from these levels purely because the margin of the safety now is looking on the side of a long-term investor. I think I've set the tone. Give me a stock which fits my criteria.
I think that's a great summary. And if you look at the valuations today across sectors, many stocks are trading at close to their 2008 lows. And clearly, India is a far stronger place than it was in 2008. Companies' balance sheets are stronger. Growth outlook is now the only question, which is in terms of determining the valuations. So from that perspective, yes, all the frontline banks are looking attractive because they're all trading at about 1.8, 2 times book, the private banks. If you take even ICICI and Axis Bank, they're only trading at about 1.8 times. If you take SBI, trading at about 0.8 times book.
That's the banking book.
That's the bank. So those valuations.
If you buy ICICI Bank, it's not 1.8 times. It's the ICICI franchise, which includes insurance and everything else, which is at about 2.5 times actually now.
True. The core banking franchise itself is there. So the only concern there then becomes is if there is growth around the corner, then you have an earnings uptick. A lack of that earnings uptick is what is holding back the market. So, but as history would prove, if you look at companies like Voltus or even a government company like Engineers India, these are all trading at very low valuations. And yes, there is this huge government push to make consumer more to go out and buy. They're thinking of various measures. Engineers India will benefit from an infrastructure push. So that from that perspective, yes, there are a number of stocks which look attractive.
Okay.
Chakri, I'm going to change gears and talk about Tata Global Beverages. Since we are discussing Cafe Coffee Day, I finished my early morning coffee, so let's stick to coffee.
Right.
Why
Was
is
it Cafe
CCD?
Coffee Day? Was it Tata Global?
It's
Your
a local franchise. It's a local franchise. My question to you is that Tata Global has been an underperforming franchise. They've got margins which are nowhere close to what other FMCG companies do. The return on equity, return on capital is not even in late teens. Why is the stock sitting at 277?
Tata Global Beverages, for all those reasons you mentioned, has had that kind of profile. But now with the company, the group level transferring some of the businesses to Tata Beverages, I think the margin profile will improve for the company and also the earnings growth trajectory. So in anticipation of that, as the consumer businesses are moved into the Tata Global company fold, I think it'll do good to the franchise. So I still think that stock, there is this good amount of margin increase in the coming years as the businesses are transferred to the business, and that's partly being reflected in the stocks.
Before we go to Devang Mehta, give me a stock where you think right now there is pessimism. Markets are not capturing the value of that franchise. Either that business is on a structural uptick or the company is on uptick, which is either earnings will come up or market share gain would kick in. For some, it could be both. But which is that one stock where you could be a lonely buyer today, but you definitely want to be a buyer? And you will filter all the noise. You will filter what Kunal has to say, what my view is, what CK's view is. You're convinced that you want to buy that stock.
Well, Tata Beverages is one, but for not
You'll
so...
buy Tata Global Beverages.
It's a good company because while the company might look expensive, I think the margin uptick that will come about in the coming years as businesses are transferred into the company from various Tata Group companies, all the consumer companies, you would see a good amount of margin uptick translating into stronger earnings growth and stronger valuations.